Okay. Hello, everyone. I think we've finally gone live, though there's this little button that's doing the rounds again. I was warned about it, but it's still something that came up. But hello, everyone. Thank you for joining. I do see that people are coming in and as we speak. So we're going to start this off. We have a very short but crisp session, hopefully. We are going to be talking about forestry in carbon markets, which is the big theme of the day. We've all just come off a very, very interesting COP, for a lack of a better word. I think there are good things and there were not so good things that happened at the COP. But all in all, I think everyone's come out of the COP feeling quite upbeat and positive about where this is headed. But with that amount of optimism comes a bit of, I wouldn't say pessimism, but safeguards as well. We want the markets to expand, but we want the markets to expand in the right way. Therein lies questions of integrity, transparency, financial structuring, tenure of contracts, et cetera, et cetera. So we're going to be basically talking about all of those issues. A hard job to do, talking about all of those issues in a 45-minute session, but we'll try our best. So yes, just quickly introducing the panel. It's an amazing list of speakers that we have here. We have Edith Kiss from Mirova, we have Maria from Abatable, we have Christopher Zink from Conservation International, and we have Jenny Henman from Voluntary. Jenny, did I get that right? Sorry, I mean...
Plant your future.
Plant your future, I'm so sorry about that. Okay, so you will hear from them anyway on their respective roles. So yeah, I mean, you don't want to listen to too much of what I have to say here, because I think it's really important that we get the speakers involved. So I'm going to quickly dive into the session. We're going to do this as a Q&A format. And please feel free to put in your questions in the chat box. They will be directed to us and we'll be happy to answer them as we go through the session. So we're not going to have a specific Q&A section, so we're going to be more interactive. So we will try and answer your questions as we go. A lot of your questions, I assume, would be answered by the interventions of the speakers, but that's something that we will see and hope to have a lively session. So let me quickly get on with it and start with you, Maria. We are seeing some, it's amazingly optimistic. We have halt deforestation by 2030. I heard that in 2014 as well. Not much happened after that, really. So we hear that again now. We have plant 1 billion trees, trillion trees initiatives, and so on and so forth, which is great. But in this entire thing, how do we see businesses react to this, number one? And number two is, how do we achieve something like this? Because, it is a fairly high level pledge, which is great. I think that's a good starting point. But how do we get into the nuts and bolts of it? And how does the business side of it really navigate this space? Because there is an element of going blind here, because it's a trend. Everyone wants to be on the train, but not necessarily knowing how to go about doing this. So Maria, your thoughts on that, please.
Yeah, thank you, Sandeep.
And sorry, and if you could just quickly, a 10-second introduction burst for all of you guys before you start answering your first question, so the audience knows who you are, really.
Yeah, perfect. Yeah, so hi everyone, Maria. I'm one of the co-founder of Abatable. What we do at Abatable is effectively help corporates, predominantly financial institutions, with their carbon procurement. It's part of portfolios that we deliver to them. And prior to founding Abatable, it's a Goldman Sachs doing carbon procurement for very large corporates. So yeah, to answer your question, Sandeep, I think you're right. It feels a lot of commitment, and I think it's probably the first time that the financial community itself has been called to make a lot of these commitments as well, that I think reinforces the credibility around some of the other initiatives that you've mentioned. One of the things we've monitored is the Glasgow Financial Net Zero Alliance, the GFANZ. It's 130 trillion of assets that have been called to be reaching net zero by at least 2050. And we know that corporates are approaching the financial intermediaries. They want to build financial products, which allows them to retire carbon credits through their investments in forestry, and also other investors that are interested in benefiting from the monetization of those credits by selling to corporates. So I think this is a very big demand signal that is sort of unprecedented and will need to be coordinated by the financial institutions. By virtue of that, there's certainly been a lot of resurgence of interest in ecosystems, nature-based solutions from this sector. And I think I'm expecting more fund announcements to come from the corporates in partnership with those fund investments in the next few years. I think that the challenges there are certainly deployment. You know, a lot of these players will be hit with the reality that absorptive capacity for a billion funds is not really there in the short to medium term. There certainly will need to be, I think we'll see probably a bifurcation of the market as well, where some of these large corporates and funds will go into the same developer that will have access to capital, leaving behind a bit sort of the smaller end of the developer ecosystem, which is truly working on grassroots projects. And then there'll be new operators that I think, to your point, will need to be seeded, will need to be grown, and that's truly a high risk strategy. So the way we come in and help corporates navigate all this is truly just allowing them to place you know, who the different players are in the system, the sort of developer ecosystem in particular, really vetting them as an organization, and then really developing pipeline with those developers.
Yeah, I mean, and picking up on that developers question, actually, is interesting because I do think this is going to be consolidation happening, which is not necessarily the greatest thing that could happen to the markets as well. So we need to be a little careful about how we see that. Chris, moving over to you. I mean, we're talking about guardrails and the works a bit here, right? And how do you see the supply side coming into this? And because it is ultimately a two-way street, buyer, seller, intermediary. We have a large ecosystem here, really. So there are different kinds of guardrails that we need to make sure that we kind of work with, and also make sure that we still have fair, transparent benefit sharing mechanisms and the whole works. So over to you, Chris, on what you think and how could this supply, demand, both sides interact with each other a little better in this guardrail discussion? Yeah.
Sure, great, thanks. First, really happy to be on this panel, such a great group. Doing incredible work, and I was excited to be able to connect with at least half this panel last week in Glasgow. So that made my year, got me out of my home office here. So I've been working on and thinking about integrity, environmental integrity issues in carbon markets for most of my career. The last 9 years of which were spent within the Swedish government, working on carbon and climate finance issues. So. In this regard, it felt like a very smooth transition to come over to Conservation International from a value standpoint. I think a lot of organizations talk about integrity, but CI really kind of drills down into the details and tries to define integrity and define and push the boundaries, asking hard questions. So things like, how do we maximize revenues that are going to communities from our projects? And this is one of the things that we're thinking about when we talk about supply quality or supply integrity. But it is really a continuum. So we have quality of supply, but we also have quality of demand. And to sort this out, we do a deep due diligence on both ends of that spectrum. So yes, on the supply side as well as on the demand side. That I think sometimes surprises people that we carry out DD on our buyers. You know, buyers of credits, especially if they're using the credits for offsetting, they should be on a demonstrable path to 1.5. So that's part of it. They should be able to show that they're cutting their actual emissions over time, and that they're really only offsetting their residual emissions. You know, I always like to recall that this market is essentially created by us. Although it's similar to commodity markets, carbon markets are a completely made up human fiction, right? So we're able to trade emissions units because we believe in them, because we trust them. So the whole thing is based on trust, and the trust and integrity piece can't be taken for granted. It's what kind of holds the whole thing up, and people understand this, and so I think that's why it's the focus right now, this whole integrity topic, and it's all the more important for natural climate solutions, because that's it's these activity types that have people and communities at their core. So now that we have this demand signal, we can't afford to get this integrity piece wrong.
I agree, actually, Chris, and the due diligence of the buyer side, I think that's quite important to have a demonstrative path before using offsets, and I think that's a narrative that's picking up now, and I'm very happy for that. Okay, moving over to Jenny. Thanks, Chris. Moving over to Jenny. Jenny, I want you to take a couple of questions. Number one, Chris touched upon the people, the communities, etc. You worked on the ground as well. You understand. There's a bit of jostling going on for project space right now. We all understand that in the markets, and that would mean that there is a race for projects, so to speak, because I wouldn't say the supply side is constrained, but there is definitely demand that's picking up, which is then, letting loose the market, so to speak. So Jenny, where do you stand on that? Where communities need to be part of the solution rather than just being a thing that is monetized. I mean, a thing that meaning their activities are monetized, and that's how we look at them. So where do you come in on that, Jenny? Because we've seen that before in terms of communities not getting their due market space. Number one. And number two, I would also like you to take one of the questions from the panel, from the Q&A section here. Do you recognize that the market is currently supply constrained? So maybe you could touch upon that a bit while you answer your question as well. So over to you, Jenny. Thank you.
Sure. Thanks, Sandeep. And hello, everyone. I'm Jenny Henman. I'm founder and chairman of Plant Your Future, which is a non-profit working with smallholder farmers in the Peruvian Amazon to do agroforestry, and we are a carbon project which is VCS and CCB certified. I also do consulting work in the natural climate solution space. So yeah, I think that's a really important. Going to Sandeep's first question. This is a really important issue. So we talk about high quality natural climate solutions, and obviously there's the different certification standards for that. Be it gold standard, VCS, CCB, but this point of kind of fairness, particularly in the investment, is one that's not particularly regulated by that. So not only with Plant Your Future, but with other conversations I've been part of with other grassroots tree planting NGOs and with investors, I think that we are seeing that the market price is picking up. And there's a need for greater transparency over benefit sharing and what percentage of the carbon revenues paid actually goes to the ground. It's a very challenging one. Obviously, investors are in the game to make money. So there needs to be some upside, but there's also a need for some fairness over that. I think it's very hard to set very specific hard and fast rules, in terms of percentages that need to go or price levels. Because there needs to be some market flexibility, and there's huge variability in the risk that's being taken depending on the stage of the investment. But I would just say I think it's one where there's a need for more transparency, and there's a need for buyers, corporates particularly, to ask very specifically. And if you don't get an answer, to keep pushing in terms of this payment I'm making of $10 a ton, $20 a ton, or whatever, how much of that is actually going back to the beneficiaries on the ground, and in what form is it going back? And then, sorry, to get to the question that came up on the panel, I think that price is going up for sure. What's really important, though, is to make sure that increase in price is reflected in the benefits flowing back, because what we don't want and what will not be beneficial to this long-term sustainability of this market is for intermediaries and investors to get very rich off this disproportionately, and for smallholders and other indigenous and local communities on the ground to just stay locked in poverty, but have some trees on their ground. We need everyone to benefit from this upside for this to really work, and got to be really careful we don't develop a sort of neo-colonial model here, which is exploitative, and it really is very important for the long-term success of the sector.
Couldn't agree with you more, Jenny. That's something that we see across projects, and I think disproportionate upside is the word. Upsides are fine. There are risks being taken. Risks have to be rewarded as well. but disproportionate, I think, is the buzzword here. Anyway, thanks, Jenny, for that. Over to you, Edith. How do you see this narrative? Because we are on a race for projects, apparently. I mean, that's what the markets look like. And this challenge of moving the entire narrative to do projects for the sake of numbers rather than actual impact. And where do you stand there? We run the dangers of just commoditizing this thing and then having absolutely, irreversible environment impacts. We've seen monoculture being something that is doing the rounds already. People are buying lands for carbon offset projects. I'm not a big fan of that myself. So these kind of things, I mean, and that's, and also comment on the right way to go about planting, for example, or regenerative ecosystems for that matter. So Edith, over to you, and also a little bit on the frameworks that we could use to build more integrity into the space.
Great, thanks a lot, Sandeep. Good afternoon. Really great pleasure to join all of you in this panel as well. So I'm coming in from the investor perspective, and we heard already a lot of interesting points. So I think really great discussion shaping up. So I'm happy to also circle back on some of those. So I work at Mirova Natural Capital, a group of Mirova and Natixis, and so we are coming from the impact investment side. I have been working on managing our first flagship fund, the Althelia Climate Fund, since 2013, where we have been actually piloting how to implement high quality, mostly REDD+, a little bit more on restoration later on now with newer generation funds, but really focusing around REDD+, tropical forest countries, and how to do this high integrity, holistic approach, multiple revenue streams. So have been working quite a bit and scratching our heads. So the benefit share is one of those. Happy to comment on that. Also the buyer due diligence Chris mentioned. On your question, so I think, yes, I agree with Maria also. There are a lot of commitments. There is money. I think the money is not a problem anymore. So there is demand signal. And now our challenge collectively is how to bring that to the ground, how to connect that with the reality of the ground. And we have to recognize that institutional investors can only come in if there is scale. So you can't blame them for that. But we also have to recognize on other sides that this is not a renewable energy industry. So we can't just roll out, billion, multiple tens of millions ticket size. And that has been a big debate, and there is this jurisdictional approach, which I think is important, but it's not necessarily going to provide a solution, in the sense that we find it extremely difficult still to work with the jurisdictional approach. The standards don't really allow for that, and I think we'll need to have some more evolution around the PPP, public-private, and where the government is able to delegate some of the functions to the private sector to be able to do this in a timely manner. If you look at some of the approaches we have seen with FCPF and others, which have done a lot of work, it's been a hard work, and we're just seeing the first credits for after 10 years, and we don't have any more 10 years to lose. So I think our approach is pragmatic. We're looking where we are at the moment, and we published a short paper on that available on the website. Is the nested approach. We do believe projects needs to integrate. We need robust baseline, but I think it's still from the bottom. We need to the private sector can very well continue building from the bottom up, and the nested approach offers a short solution. In particular for the community-led projects, I agree. We heard already, I think Jenny touched upon, I think there is a huge risk with jurisdictions sidelining community-led approaches, and so we can't make that mistake. So I think we need both, and we need to work from the ground up. On your question, and we can talk about the supply. Definitely, the market is short, so we need high quality supply, and I think we're going to discuss that in the next round of questions. On the commoditization, it has to happen, because otherwise we can't go to scale. As an investor, we can't spend years to due diligence a project, and buyers. We have seen buyers spending years due diligence, and this is just not scalable. So we need, and I think that's happening. There is a benchmark already. Exchange traded products, I think it's good. The prices are going to the roof on that one. So if there were some questions, so we do see a really, still very low, I think $13 was yesterday, but it's much better than when we were investing and we were sub 5. So I can tell you that there is already a big development there. But what we need is recognizing the additional benefits. And I think where we are still struggling is that the current standards don't allow for that. And our view is that the VCS and CCB on, for example, REDD+ type of credits is a good minimum standard, but it's definitely not, we're not able to show the verifiable outcomes around the other SDGs. So one of the things we are going to implement in our projects is to work on this SDG baseline and co-benefits, and around especially biodiversity. There are a lot of developments, new metrics, new standards. And so I think in particular, SD Vista will offer a solution. So we are quite keen to be able to show this and in a verifiable manner. And then I think the market will recognize and pay for this. So we can have a benchmark price, and then we'll need to distinguish or have these different characteristics, which we have on other commodities like cacao. You have the benchmark New York price, and then you can have the other elements. So I think that's key. And then on your last point on the monocultures, yes, I think the big issue has been in the past is this siloed approach around the climate and then biodiversity, and we have so many crises, and it's especially the twin crisis of climate and biodiversity. I think what is encouraging is that we do see some more convergence, and there are nature-based solutions for us brings this opportunity. And as a community, again, we have to collectively be smart about it. And for example, ecological restoration, or instead of active plantations, monoculture can offer a really good solution for both climate and biodiversity. So I think there is that we need to still ensure that we have a holistic approach, rather than just run for the carbon and then trash the biodiversity, and the next day try to save biodiversity again from scratch.
Thanks, Edith. Thanks for that. I mean, there's one important point you made, that FCPF did take 10 years to issue some credits, and we don't have that time. So we need all hands on deck, especially with regards to the standards that we have available with us right now, and we need to continually improve them. Over to you, Maria. I'm just going to play devil's advocate here, actually. I mean, she did mention that some amount of standardization is important, and commoditization is important for achieving scale. I'm also a firm believer in getting buyers closer to projects. So where do you stand here in terms of standardization? I think there is merit in it, but it needs to be done. It's a complex thing here, because every project has different financials, different co-benefits. How do you really measure all of that? And also, if your thoughts on the kind of offtake agreements that you see, which could lead to unlocking more capital. We're seeing lots of structures happening. So a few words on that as well would be great. Yeah, Maria, over to you.
Yeah. Well, Sandeep, I think a lot of similarities with what has happened in the sort of ESG and impact space, where I think a lot of operators came in really disoriented around the terminology, and suddenly there was a bit of a consensus on the fact that maybe there were different approaches and they needed to be defined as such. And I think I see the same probably happening around carbon offsetting. A lot of standardization will be required around how to differentiate maybe what is a plantation forestry project relative to an active restoration one, to what Edith was mentioning. And so this is probably going to be defined as more industry participants are coming in. It's unclear how is that going to be reflected in the price, whether premium will need to be recognized, and unclear also what sort of buyer's preference will be in the market, whether they're going to go for volume. In that case, maybe it's not really aligning to removals, and then for that reason they might just want to be focusing more on avoidance and that type of project. I think we know the task force for scaling voluntary carbon market is working on some core principles, but I honestly think more needs to happen. Defining also standardization expectations for the developers and how to ensure their integrity of baselines, the sort of encouraging them to preserve biodiversity. And also incentive alignment, to Jenny's point as well, between the different stakeholders. There would need to be sort of a common practice, a standard that will emerge, and that would certainly allow a lot of developers to inform their pipeline development as well, and the design of their project by virtue of that. What we're trying to do on our side is certainly try to aggregate what that corporate demand looks like. We're building portfolios that really try to categorize clients by impact appetite, geographical preferences, and also budget, because that truly determines sort of where a lot of them are able to pay for quality, and some that are instead more focused on volumes. We're doing that, and at the same time, we're trying to structure offtake agreement with different project types in a tandem with those projects. So the way we're tackling is aggregating the demand on one side, and then we're working on raising a facility that would allow us to structure offtake agreement with the developers. And we know that through that, we can help the developers also inform a bit more of their pipeline. We give transparency to them, how we assess them, which is really, really important. And also from a signaling standpoint as to, what the demand is asking out there.
Sure. No, thanks. I mean, we see that as well happening with offtake agreements as a collateral for a loan of sorts. And there are things that are being done in the industry, which is a good segue to my next question to Chris, actually. You're working on a fund with CI right now. What exact gaps in that funding space are you guys looking to address? And also just comment on patient capital and how ecosystem restoration actually does take time, and how are you educating your investors, on that, saying that, guys, there are inherent risks here. It's not a foolproof investment. It's the nature of the investment. Plus, it does take time. So where do you guys stand there? And right after that, I'll probably pick up some questions from this thing as well. Over to you, Chris.
Great. Thanks for that, Sandeep. Yeah, I'm really excited to talk about this fund. I've been sitting on the boards of carbon trust funds of various types since the start of my career back in 2007. And rarely have I come across a model which has gotten me this excited. So I joined CI in July of this year to lead the work of a new fund that's focused specifically on natural climate solutions. We're pre-launch right now, so we're in a fundraising and pipeline building phase. So I won't go into too much detail, but what I can say is that the fund has two main theses. The first is to catalyze the market for NCS credits. And so we can do projects that are in the protection, so red, restoration, and improved forest management buckets. And we can do this by funding early stage scoping, pre-feasibility, feasibility work, and essentially all the way up to first issuance. So, thinking that this early stage high risk capital is where the private sector is largely unable to go. So that's the gap that we're aiming to fill. And then second, it's really the question of high quality. So how do we have an outsized impact on the direction that the market is going in terms of quality? So on the supply side of NCS transactions, it's the quality discussion is really about engagement with local people and indigenous communities, and the question we always ask ourselves as we design projects and work with communities is how do we put people first? How do we involve them in the design, et cetera, rather than sort of introducing an entire project idea and saying, here, this is how it is as a fait accompli. And then of course, putting people first is how we achieve permanence as well. So that's really the solution to the permanence problem, and it's the right thing to do. So we're aiming to have a philanthropic pot of at least $100 million US dollars. We're well on our way to that goal. And shameless plug, happy to talk to any interested donors willing to push the market in the right direction. It's a revolving fund. So the idea is to have a quasi-commercial model. We'll aim to have reflows. The idea is to have a blended finance model. So using philanthropic funding as concessional funds that would then leverage private sector capital. Any reflows that are coming back in are essentially going back to finance new projects, new communities. The majority of the funds are meant to be spent on site-specific investments, but we're going to set aside a percentage that would be for NCS science, research, policy, and other enabling conditions. And we have a great science team at CI. A number of really brilliant scientists that are working and publishing work on things like irrecoverable carbon hotspots. And the idea is that we'll use this cutting edge science to feed into an investment prioritization tool for the fund. And then finally, getting around kind of to the meat of your question, we do find significant differences between the various types of projects that we invest in. So of course, everyone seems to want removals. These days, we're pretty agnostic on this debate, but we say that we want and need all of the above. But probably, reductions, protection is needed most of all right now, and so that's probably the most urgent to protect these few remaining landscapes. But we need, of course, excellent restoration projects as well. In terms of investment profiles, restoration is more expensive. And so we have, far longer repayment horizons. So we do need slow money. We want to co-invest and de-risk that private sector investment, but we need more money upfront from the private sector to do so, and it needs to be that kind of patient capital. So we're seeing this to a certain extent, but not enough. So that's what we're hoping to see a bit more of: lower IRR, longer tenure. But then what you get is higher impact for people and for nature.
Sure, thanks, Chris. We're also seeing buyers actually using the hedge prices as an IRR as well. It's not just the investors, so that's something that could be interesting. Before I go to Jenny, quick edit, 10-second answer on this, please. We're running out of time. Is that there's an example for public-private partnership. Do you actually see work in the forestry and agriculture sector? Would you have any example offhand, Edit, of a public-private partnership?
Yeah, I think what I was alluding to is for the jurisdictional setting in particular, right, that where what we would like to see is a standard to allow, for example, the private sector to develop the jurisdictional baseline. At the moment, it's still only government needs to be the proponent of the program. And we do have capital, we do see an appetite from investors to be able to finance these jurisdictional baselines, and that could do much faster than waiting for the governments. And I think, Sandeep, you can comment on that on your side in Asia. So that's what I mentioned too, and I think that's where we do see an interesting way to work with governments, or alternatively also on the national parks. We have been working in national parks in Peru, for example, and I think that's a great way to let that to NGOs and then help that work with private sector hand in hand with the government, of course.
Lovely. Thanks, Edith. Okay, over to you, Jenny. Sorry for that. I just want to pick up some questions as I go as well. Jenny, I mean, we have the buy side, typically the fund side, and all of these guys are doing amazing amount of work. But there is still a gap on where to access this financing for. And we all understand that there are requirements, but the fact remains that a lot of indigenous communities come up to people like you or me, for that matter, and saying, where is this market for us? So how do we bridge that gap? And potentially, do you see that as a massive challenge going ahead? Because demand is going to pick up, supply constrained. Yes. So where do you see that going? And also, if you could touch upon one question that came up here, which was an interesting question. There are still projects at $2 a ton and $50 a ton. How the hell do you explain that? I think that's something that I have been asked a lot as well. So your thoughts on it, and I would probably try and answer that myself as well. So Jenny.
Yeah, thanks, Sandeep. Those are really interesting questions. Definitely ones I've been thinking about as well. On the back of being in Glasgow and hearing so many announcements about, funds that are available, new funds, government commitments and pledges to forestry, including, restoration. And then reflecting myself on the reality of what's going on the ground, knowing that actually, smallholders and indigenous communities are, the main custodians of these lands, and actually very, very few of them are accessing any of this finance. I think there's some different challenges here. I think one is the minimum ticket size that often funds and governments are looking to put forward, and that is just often not. That's a huge problem for allowing money to flow down to the grassroots. So if it's a minimum ticket size of $10 million, say, and you're trying to funnel that into a grassroots project, that is really can be quite a lot of money if that's to be spent in a short period of time. I think that, and another problem with that can also mean that means that then an intermediary oversees the work. So very rarely then does the money really go to the grassroots, and a lot of the money is sort of lost to overhead along the way by someone else managing those funds. So we do need to find a way to get money directly flowing to indigenous communities and local communities, and to remove some of the barriers for that. So one of those is to actually allow smaller ticket sizes, and except that's a bit of a hassle, but that perhaps it is going to need to do more due diligence on a larger number of small projects. I also think there's quite a lot of barriers for grassroots organizations to access funds because of unrealistic requests in terms of procedures, policies that are in place, which are actually often not so relevant when you're working at that level. You're there seems to often be a bit of a disconnect between the requirements and then the actual activity that's going to take place. I also think it's really important to bear in mind that and maybe I can see these questions on monocultures as well in the from the audience, that relatively small amount of native species restoration and agroforestry has happened globally to date. And there's actually quite a lot of barriers to building that up in terms of things like access to native seeds, knowledge on cultivating native species on degraded lands, overcoming issues of land tenure and so on, which are also very much needed to allow this money to flow into the smallholder and indigenous restoration. So it's very exciting to see all this new money out there and promise, but from talking to many of the grassroots organizations at COP, we just really hope it can flow down and we can access it so that we can scale up with people on the ground.
Couldn't agree with you more, yes. Edith, over to you. Fiduciary requirements ticket size. I know that you guys have a point, like how could we do this? But there has to be a way around this, because I myself see a lot of communities who really can't access the kind of funding that's out there. So it's a really lost cause, really, to announce all these funds and not have enough places to deploy them. So where do you guys see yourself working? And maybe early stage funding, maybe there are different structures that you guys are working on with your fund or something like that?
Yeah, no, absolutely. I fully agree with all these points. So we really need to work on that. And we had to come to the same conclusion over time that, yeah, you even sitting as an impact investor, which typically means a bit more, maybe risk taking, a bit more patient capital, is that the typical ticket size of 5-10 million, requirements around track record, around a certain readiness to be able to go through our due diligence processes takes 6 to 12 months. That's very limits the inclusivity for smaller projects. So we have been working on some solutions. So, for example, in collaboration with IUCN and Jeff funding the Nature Plus Accelerator Fund, where we really try to identify this missing middle, this missing gap between grant-funded projects and commercial capital. And so that has a mission even broader than carbon around environmental assets, because we also do see that, if you have a solid business case on carbon, I think the private capital is now there, kind of. We still have a bit of a headwind with around all the issues around the net zero claims and now the Article 6, but discussions. So we have seen an incredible growth in the past 2 years, now a bit of a stalling and again a bit of confusion. And I think that's very dangerous, because we need to keep the money. We need to make sure the money keeps flowing and we figure out the accounting as in when we go, rather than just stop for another 10 years. So I think on our side, we think that we need, as an investor, what we can do, or as an asset managers, we can do maybe create some vehicles that have a bit more agile structure. So that's, for example, the Nature Plus Accelerator Fund is doing. It's going to offer a smaller ticket size. It's going to simplify the due diligence, or let's say chop it up. So for a smaller ticket, you need a shorter due diligence, and then we build it up gradually, accelerating them. So that, and then we had another fund that this fund is just announced the first close and is not operational yet, similar as Chris mentioned on their side. So it will be hopefully operational fully by next year, with the first amount of commitment around between 10 and 20 million. We have another fund, the L'Oreal Nature Regeneration Fund, which is very exciting. And I think we shouldn't underestimate also corporates, the role they can play with patient capital as an impact investor, not just the carbon. And that's, I think, exciting, because in this case, it's an impact investing vehicle, 15 years. So it's patient capital and really looking for the high impacts. And we have been able to use this fund, Chris also mentioned, on like early stage feasibility funding, for example, on blue carbon, or other type of ecological restoration, looking at really the ecological restoration type of projects as well. So that's I think what we need to be smart and use a different type of capital. And I agree fully that we need blended capital. So typically the scarce public funding can do much better to go into a blended structure and help then go these investors to go a bit more upstream and more early stage, and so that it can enable more inclusive approaches. We will need some aggregation. I agree. I see the frustration, and I fully see that from Jenny's points. Unfortunately, we'll need to figure out some ways to aggregate. And there were some questions, I think, in order to go to speed. we do already see, compared to 8 years ago, that 8 years ago it was all NGO led, which is important also for the good base. But in order to professionalize, scale the market, we need private sector, and they're already coming in. So project developers are coming in. Expertise and capacity is an issue. We need to build it up. So I think we'll need. There are a lot of bottlenecks on this market. On that, but I think if the private sector comes in and they will help with the project development, professionalization, hand in hand with NGOs, I think there is a hope that we can do this faster.
Great, thanks, Edith. We have a 5-minute warning here, so we're going to just run through quick amount of questions. We've tried and answered quite a few, and we'll probably get back to you with the organizers in terms of the questions from the audience. We just have about 4 minutes to wrap this up, so I'm going to quickly ask for 1-minute interjections on our next points. So I'm going to start with Maria on metrics and where do you stand? And we also have this avoidance versus removal. I know 1 minute might not be enough to sort out that issue, but where do you guys stand? Because I do see that as an issue that comes up again and again. Maria.
Yeah, there's certainly a lot of debate on removal versus avoidance. I think a lot of the buyer preferences have been on removal, and there's a lot of opportunities to catalyze that demand into new projects that are, to some of the earlier comments, higher risk, but certainly where the corporate is interested in risking more and taking potentially a less conservative approach than a financial intermediary. So I think from that perspective, true value in removal and the narrative that those need to scale, certainly avoidance is really, really key as well. So I wouldn't want to have a portfolio that is only removal, like truly needs to be a blended approach. And there's a lot of merit in supporting avoidance projects, given the sort of, the emissions that they contribute currently.
Excellent. Thank you, Maria. Really out of time. I actually had a follow-up, but I'm going to let that be for now. Chris, Indigenous peoples, tenures. We've spoken this at the COP as well, Chris, on how do we do this tenuring part, and also a bit of how HLFDs cannot be addressed by carbon finance, and just a bit on that as well.
Sure. Well, okay, just really quickly on HFLD, we're in active discussions with a handful of high forest, low deforestation countries. And of course, the issue is historical baselines, additionality. Some make the argument that carbon markets are maybe the wrong tool for the task. I would say that probably we just need to innovate some more, be more creative, think about methodological solutions. So we're looking at our trees. There's questions on biodiversity there, looking into VCSJNR. There's also things we're wrestling with. So we're evaluating our options, but I would say the jury is still out and there's not a silver bullet at the moment.
Sure, thanks. Jenny, top-down approach. I'm a firm believer that that's the wrong way to do it, but it's happening. Frameworks coming up left, right, center. We're just trying to reinvent the wheel. I think that's my personal view. Your thoughts on this in terms of donor-driven, kind of country-driven, into host countries and pushing an agenda through as far as ecosystem restorations are concerned. What are your thoughts on that, Jenny? The top-down.
I just think it's very important to make sure that local landowners are adequately consulted and informed, and that their decision making and interests is taken into account. So anything that's more like nationalizing the rights or bypassing their carbon rights is obviously going to be problematic, because if we want to incentivize Indigenous communities and local communities and smallholders to take good actions, they need to directly see the benefits and be bought into that and understand it and be taken along and be part of it. So I think it's a bit of a distraction, and what we really need to do is be getting money flowing down to the grassroots.
Great, thanks, Jenny. The distraction part, I agree with you. I couldn't agree with you more. Edit, Article 6, big splash that it made last weekend. 30 seconds is what you have over there.
I think we need to have another 45-minute session on that, because I just wanted to touch on, and maybe I'll use up my time to some of the audience asking on the monoculture. I just want to make a quick point, so just not to be unfair to it. So I think we do recognize the need for timber, and we do recognize the monoculture type of interventions. It's just our view is that whether carbon is additional in that case, and unless the project can really show what it does with the carbon finance, I think it can be dangerous, because as Jenny mentioned, I think we have so much else to do, and and high biodiversity, and we need higher prices. As other point, I have seen a question on seagrass. So the interesting thing is that the price is going up because finally we have signal. It's still slowly, but it's going up. I think it will enable, catalyze new methodologies and all those less slow-hanging fruits, which are more exciting maybe for the biodiversity side. And then there was a question on biodiversity metrics versus carbon. I think if it's habitat based, like a REDD+ project, you preserve the habitat, it's indeed there. You need to be careful with double counting or like additionality. But where I was mentioning to is more like new tools like this, the IUCN STAR tool, which is around IUCN red lists, where you can now establish baselines and also create interventions to help with the extinction risk of some of the species. And then those will require more money and action and mitigation plans, and that needs to be recognized and funded. So I think we have now tools to really work on that and separate and stack these different ecosystem services.
Thanks, Edith. Thank you. I'm so sorry we're getting a lot of things from the organizers here. So thanks, and thank you all for this amazing panel. We have some unanswered questions. We'd be happy to touch base offline as well. We'll request the organizers to pass them on to us, and we will answer what we can. There were some issues left, but 45 minutes is what we had. I think we had a decent conversation. And thank you to the panel, and thank you to the audience to have sat through this. A good question, so really thank you. Thank you.
Thanks a lot.
Thank you.
Bye, thank you.
Thanks a lot.